All right, everyone, welcome back for another episode of Carnivore Trades. Today is Saturday, January 11, 2025. If you're not done so already, please give the video a thumbs up if you like the content. Consider subscribing to the channel. We're posting videos every day, two videos a day, in fact. So if you like TA, dealer levels, no BS analysis, don't forget to subscribe. And come find me on carnivoretrades.com for swing trading alerts analysis and live day trading. Anyways, we're doing it now. Here it is. So we're going to do the 2024 review and 2025 kind of outlook. And a lot of people like to do theirs like right at the end of the year or right at the beginning. Usually I like to wait about a week or so into Jan because January is a very pivotal month. It's very tricky to trade. And I always like to see that first week or so of January before I kind of make assumptions and kind of figure where the market could go. Now, just to preface everything, again, these are just guidelines. Some of the kind of dates and time frames that we look at are just, again, kind of projections. And guess what? A lot of them are probably going to be wrong, just like 90% of the guys who do this stuff at the beginning of the year, because we're 2 weeks in and a lot of things change. It's very hard, the farther out you go in time, the harder it is to be accurate. If I'm looking at SPY or SPX right here, and we're looking to, like we did the other day, we went long off this fake, failed breakdown here. It's very easy to tell when you're going to be wrong, right? Because you're doing it on a 10-minute time frame. Whereas, it's easy to project, like, okay, we're probably going to do this. Whereas, I don't know what we're going to look like in December, right? I have to see quarter one, quarter two, I have to see all the pieces of the puzzle. But these are just guidelines, and there are, I do them because even when I'm wrong or even when things turn out unexpectedly, the dates I come up with are usually pretty accurate. How we get into those dates are, maybe up into air, but they are, good guidelines and good areas where to say, okay, we need to be careful around this time period, right? We're looking for a pivot around this time period. If we're going down into this, we might want to look up, vice versa. So just to preface that, these are not necessarily predictions or anything. These are just my thoughts on the market and where I think we could go. And, if you find it entertaining, again, that's for you here. I'm going to try and keep it as quick, as brief as I can. There's a lot of material to discuss. I could go on for probably like 3 hours, but I know everybody doesn't want to watch. If you get bored, just leave it on mute and let it play all the way out. It helps the algorithm when people watch the whole thing. But anyway, all right, let's look here. So let's start off with the 2024 review. And I want to briefly, quickly just kind of get a snapshot of where we're at. So right here, I had a cycle date for, I think it was the 16th or 18th, but around that date, look for some sort of move. Now, in hindsight, it would have been great to be short there. I was not. I did have a short. I did say that VIX should get supported at 13. Right here, actually went long the VIX with the trading room. We had a small position, and I saw the market kind of flagging, and I said, well, into the end of the year, there's not going to be a lot of volatility, so I actually covered that for a gain, and if I had held that, it would have been nice. I mean, it wouldn't have been a big position anyway, but the reason why I didn't think that this right here was going to be to the downside was, again, it's just going to sound cheap, but like the Santa rally. So that's a real thing. And especially in an up year, I just like tallied them all up here. Actually, there were 5, there's probably more, but there were 5 major cycles that were coming, like converging right around that week between like the 14th and like the 19th. So really in that week there. And usually and they're longer term cycles. And when you trade up into, those cycles, especially the longer out they are, usually you're going to look for a down move. The reason why I wasn't looking for a big down move and I wasn't positioned for a down move is because I've seen, there was a pivot. This is the first time I've seen any volatility in that time period that wasn't already a volatile area, right? There was if we look back here, I can show you. In 2020, I believe it was December 21st, it was the 20th or 21st, there was a major cycle pivot that was supposed to, be in play. And you can see, there it is. That was it right there. That was your pullback. So that's all it was. these cycles tend to fail big time when you have a big up year and you're going into that Santa rally period. Volume's light, positioning is light. Fund managers are winding down. Nobody's going to take on big positions into the end of the year when you like S&P's up 27% at this point. NASDAQ's up 27%. You know, are you really going to take on a big bet with a few days left in the tax season? It's not very likely. I've seen them fail so many times. This is the only time I've seen it play out. So maybe I'll take it more seriously in the future, or I mean, at the same time, it's also a serious outlier. But at the same time, that was a major day, and I talked about that area. Members know it. I'm sure it's on the public videos too. But obviously, big sell. So that was that kind of recent action. Right now, we've been chopping inside of that, and bears this past Friday did do some damage. They finally closed us below those pivots. Although right now, just off the cuff here, I don't think the Qs look all that bearish here at the moment. I think we might get a little flush down on Monday, but that's besides the point. So we had that big sell here, FOMC, and yeah, markets have kind of topped out ever since. But going back to kind of review the quarter one, where I was a little wrong was I thought we'd have a quarter one, I want to say correction, and I went on record in the beginning, go back and check the video from last year, but I said I wasn't really that bearish. In fact, I thought we'd close up on the year, but I thought we would see some sort of correction around mid-Jan, and you can see we had a very sharp sell. If we go to the SPY, I want to show you the SPY because you can see the volume, right? You know, volume kind of light, boom, big uptick in volume there. End of year volume, I don't really count that, but big uptick in volume, sell, and I said, okay, this is the cycle here. We're gonna see a little pullback to 460 SPY, right? That's it. Not like I was super bearish. We're gonna look for this, and then we're probably gonna go up from there. That didn't happen. That was kind of the surprise of the year. However, I did tell you, watch for late June for a pivot. And it's funny because we actually traded up into late June, but this was one of our trades of the year. And I had this with both services, swing trade and day trading. The day trading room, we had a little bit of a kind of swing size position into it, but it was good nonetheless. We had SPX 5200, just bought right into that end of May. And that was a massive move into the summer. Talked about from here, we should go to 5,600. That took place. Another trade of the year, the trade of the year for me anyway, definitely for the live trading room, they'll attest to that. But we had Russell 2000 futures, so pretty sizable position too. I think we added to it. And we caught this whole move and did scale out a little bit on the way up, but we had runners all the way to, I think, like 222 points, which is, you know, for ES, that's like the equivalent of, it's pretty much like this whole, that's like 200 points. So that was the trade of the year. We also caught the August low. Well, I got long a little early, but I caught this, nailed that, and we got a nice trade off of that. Took a little bit of a hit here on the way down again, got long a little too early. I did stop out. I didn't want to stop out, but sometimes you just hit your max risk. You don't want to, risk it. And of course, they gapped it up the next day. But that's just the way it goes sometimes. It was a Friday to a Monday. It is what it is. Did catch the second one, though. Again, IWM. There's a new small caps we're going to catch up. We caught that. Big power move on the election. We also had Bitcoin and Ethereum on that as well. And I think we had on the runner position of Bitcoin, I think it was like 52%. So small size, but because it was a runner, but still a big gain. Sold it right into the top to the day. So again, very, good year overall. Missed, we had a little bit of a short right here into that April kind of Q2 area. Didn't hold it long enough. Went a little long, a little too early, but we did, make some money off of this here. I thought that that's the second thing here to go back to this. Here's the other area I was wrong. I thought we would, go down into late June. This trend line wouldn't have been a thing yet because there wasn't a pivot, but you get the idea. I thought we would have gone down into like that 31st of May area, maybe the 200 MA, maybe retest the 4900 breakout. and then we would go higher. We didn't quite do that though, obviously. So one of the things I underestimated was the amount of liquidity that they poured into the system. So give you one thing I did good, one thing I did bad. One thing I did bad was underestimating the amount of liquidity they were pouring in. The good thing is, once I realized how much liquidity they were pouring in, I was fearless in buying dips. And that proved to be the correct case. You know, bought here, sold, scaled out here, bought here, sold, scaled out. And, you know, I knew the dips would get supported really all year. And a lot of people were mad because they wanted more of a correction than this or more of a correction than that. But, you know, when you see the kind of market you're in, you got to trade the market you have, not the one you want. And I would say that's one of the things I'm probably the most proud of doing this year. So overall, I was kind of looking for a little bit of a retrace quarter one, maybe into quarter two. We didn't quite get that, but nailed the June pivot. There was also a pivot I told everybody to watch out for around July 13th. And I said specifically technology, specifically semiconductors. And when was the high in the semis? July 11th, pretty close. I also said famously, buy IGV, sell chips. And you can see if you had just done that trade and you'd held through the August drawdown, you did very well versus the SMH, which is not taking out those highs. So that was probably, you know, those are my bigger calls this year, cloud versus semis, and obviously the Russell, and really just staying with the trend. So I know it was overbought. I know the breadth was this and that, but you gotta stay with the trend, and usually works out for you. So that's kind of the 2024 little snapshot. I don't want to spend too much time on it. We did hit our targets though, 5,600 in the summer, and I was looking for 6,100 by end of the year. I thought we could get to 6,150 here on a little scoop and then like a nominal high. I'd say chances of that are kind of hard right now unless they gap this up Monday and leave all the shorts at the altar. Maybe we could do this. I wouldn't rule it out, okay? Because I don't think anybody's thinking that can happen. So just rule that out. You know, I wouldn't rule it out, but bears showed up on Friday. So again, I don't want to get too short-term oriented, but let's just cover here. So let's go into the positives. We'll do the positives and negatives for kind of the big picture. So right now, one of the positives is the same positive that I gave you in the beginning, or in the 2024 video at the beginning of the year. U.S. markets are still number one. We're number one, baby, right? The more the dollar goes up, right, the more that hurts emerging markets. And these guys will pour money into the NASDAQ. They'll pour money into tech. Like that's, you know, it's a real thing. Heck, even the euro, you know, even these European countries, they just don't feel secure. Asian countries too. So we still have that money flow. And the worse things get for us, the worse it's going to get for everybody else too. So if we go into correction, it's going to be bad for, you know, everybody involved, for the most part. So you have that foreign money coming in. We also have, I want to talk about this a little bit here. I don't talk about it very often. I try not to. I've made a point to not to do it, but I'll do it a little bit here. I try to keep it just for the Cycles course members. I do have all the information on the website. The link will be in the description if you want to learn all about it. How I called the top in 2022, almost to the exact day. How I figure out these pivots too, like the end of May last year. But the 100-year cycle is still pretty bullish. So again, I think there is something, I know it's like, it's so cringe sometimes when you hear like certain, like these accounts that are, oh, the 100 years, or the roaring 20s, you know, this and that. It's still a real thing, and it's still bullish, right? I mean, like we're still kind of, if you kind of shift it a little bit, if you know how cycles work, if you shift this over a little bit, it's actually pretty accurate to kind of where we are now. We're using the Dow here because it goes back farther than the S&P, but it's still kind of got that bullish structure, and the trend is up on the longer term time frames. We are a little stretched, yes, but we still have that structure, and if it plays out, it doesn't really point to a top till later in the decade, obviously, as I'm sure you can figure. Additionally, you know your GAN stuff, which is also covered in the course. Everything's in there. Fifth year of a decade is usually bullish. We also have a dovish president, right? Trump. Everybody knows, if back in 2020, you remember Larry, like if the futures were down 10 points on the ES, like overnight, Larry Kudlow would just appear on TV somewhere and talking about V-shaped recovery. It was actually it was pathetic, but it was actually quite impressive, like how dedicated they were to pumping the futures. But we have a dovish president, Trump. We've got, and believe it or not, we have AI, we have innovation, right? Companies we're in the middle of a revolution, right? Now, you could argue it might take time for that to happen, but it's still a thing, right? It's still a thing. And you also have right now a resilient consumer. I don't think any economist predicted we'd be holding up this well, this deep into a yield curve inversion. So that's really the big positives right now. Negatives. I mean, there's a laundry list, and that's how markets always are. It's always more negatives than positives. But you guys know, inflation, right? Yield curve, bear steepener now. Liquidity is dropping out a little bit. We have a regime change. There's uncertainty with Yellen and Powell, how Trump's going to transition. Is he going to bully Powell? Is he going to cause instability? But we do have some liquidity coming out. Reverse repos, drop down to almost nothing. You also have geopolitical tension. It's not going away. So those are some of the kind of like fundamental reasons. For more technical reasons, extended rally, right? If we let's look at the Qs actually. I mean, you're so extended from your monthly 20 MA right now, right? We could fall to the monthly 20 MA this month and be at 440 and still be in a monthly uptrend, right? Additionally, 254 here to 540. That's 286 divided by 254, 112%, right? In 2 years. And you have a nasty topping tail for the month of December. Another thing, and this was actually from one of the members in our trading room. Good catch there. But if you take the pandemic low, which is say 2200, 2191, just say 2200 to 48, you get 26, right? 2600. What's 2600 plus 35? 61 exactly, right? So perfect. Not going to be straight, but you get the idea. Picture perfect measured move, right? So from a technical standpoint, we also have reasons to look to the negative here. Also, other things, crypto euphoria, things of that nature. There's also, is that head and shoulder? We don't really need to worry about that right now. But euphoria, and additionally, the other thing that I'm really going to hammer on here is concentration risk, specifically stocks like NVIDIA. This was one of the reasons why I predicted a bear in 2021 because of Tesla. This was just a big fat gamma squeeze, right? This company did not have the earnings to back up this. This was a big fat gamma squeeze. And it became, the 7th or 6th largest company in the S&P with no earnings other than environmental credits. And I said, when the air comes out of this and this gives all these gains back, it's going to be a tumor on the S&P. Well, look at NVIDIA here. I mean, does this look, people are saying, oh, well, it's consolidated on the weekly, right? Yeah, but look at the monthly, look at the more dominant, hell, look at the quarterly, right? I can find my time frames here. Look at the quarterly. We could sell all the way to 50 on the quarterly this quarter and still be in an uptrend. In fact, I'm going to show you a chart right now that I've never shown anybody. And there's a reason why I'm picking on NVIDIA right now. But you can see here, if we take a fib extension, we've never really confirmed above that 425 from the 2022 low. It's held pretty well. We have kind of peaked above it a little bit. It's held pretty well. Monthly, it never closed above that previous high. But the reason I'm picking on NVIDIA is because this is now it's the second or third largest, that's the second largest stock in the S&P, second largest stock in the NASDAQ 100. And it's also a Dow stock now. So if the air comes out of this thing, let's just say, again, let's just use like a reasonable case. I'm not even going to take the 2022 low. We'll just take the 2023 low, which I would never even take a fib from this pivot anyway, because it's not major enough. But even if we just retrace 50% of that, brings it down to 95. How many S&P points do you think that's worth? How about if we do this actual pivot? If it retraces 50%, that's 81. That's 61865. How many NASDAQ 100 points do you think that's worth? So I think concentration risk is a real thing. So those are the negatives here. Those are definitely the negatives. Now, overall, it's funny because you always do the negative second, and then it always sounds super bearish. But even in 2022, when we had the air come out, I mean, really, to look at like a quarterly chart again. Again, shout out to Dan from the Chart Guys finding this one. But really, on a quarterly chart, all we did was pull back to the 20 MA in 2022. So we could do that again here, and it still would just be a quarterly uptrend. But to get to kind of the forecast here, we'll talk a little bit about dates. We'll talk about kind of where things could go. Overall, I think the theme of this year is consolidation and concentration risk. Typically, fifth year of the decade is bullish, yes, but we've also gone up for the last 2 years with uncontested rampant rallying, right? QQQ up 112%. You know, just absolute, you know, runaway freight train without any barely pullback. You know, this was like a swoon, very brief. This was a dip in the big picture. So typically, I'm going to kind of go to more consolidation. There's lots of evidence of that historically, and I'll just touch into it briefly. I don't want to go too crazy, but 2015, similar, right? We had a big up run from 13, 14, and then we just kind of stalled out. And we sold off in the end of the year, rallied back up, sold up, and then there was a big bottom. You know, there's definitely historical precedents of this, like 05 even. 05 was a bull year, but mostly consolidation. So I think that's kind of the theme here. Again, it's not overly bearish, but I do think we have to give some back, if that makes sense. All right, so again, not super bearish, but I think we could see some turbulence definitely. I think we might already be starting to see that right now. One last thing I want to talk about before we get into kind of like looking at the charts here a little bit more is bank forecasts. Last year, this is one of the points I made for the bull case actually. Last year, like the median S&P forecast for all the banks and ratings agencies was like 4,900. I was like, so you're telling me we're only going to rally 100 points all year, or we're going to close there? I said, so nobody's expecting us to rally. So that might be a reason for us to rally. This year, they're all 65, 66, 67. You know, Tom Lee's at his 7,000. David Hunter is at, you know, high on mushrooms levels, right? You know, like he always is. I shouldn't even mention his name, but anyway, right, bullish bank forecast. Everybody just assumes that dips will be bought, you know, market's conditioned to buy dips in the big picture. So bank forecast, definitely. As far as the charts here, and what I think we could see, I think Q1's a little bit rocky. I think it's more, I don't think we're going to see a volatility event. I thought we could see a volatility event. My base case originally was we'd fill out this flag here, push up to like 6150, 6180. And then if we were up into like this kind of period in the middle of Jan, I thought we could have seen a volatility event, like something like this, very sharp, very steep, very dramatic decline. Retrace the 200 moving average, something, you know, very steep in a very short period of time. Very much like 2018, where we had 2 bull years, and then we had a You know, look at the 20 MA, and look how we just pulled away from it. Like that's kind of what I was looking for as a base case. Like I thought right here, okay, here we go. We're going to pull away from it right there. I don't think that's going to happen now. I think we'll see some volatility, but it'll be very choppy on both sides. And I think we'll see a little bit more downside, and we'll get a fierce rally. A couple of pullback targets. We got this trend line down here, 200 MA. If we take the 2023 low, I mean, there's your 236 right there. So that's probably your local level. Steeper levels. This would have to be later in the year, but all the way back here. Now, again, is it going to go down? You know, it looks like, oh my God, he's calling for 4,900. I mean, not necessarily. I mean, if we do this and then, you know, go up here and then later in the year, if we go down, it might be 52. Right. But right now, I think Q1 could potentially see, depending on how high the next bounce is, I think it could see 55, 54.50. That's 10%. I mean, that's all it is, right? From here to here, what's this? 56.50 to 51.20. What's that? 50, 51.20. 9.4. So, I mean, a 10% correction is not really, that's healthy, that's normal, right? So I think that's totally possible. When do we see that by? Well, that's the question. I have to see the pivot low first. But I'll tell you this. Jan OPEX is always a turning point. Martin Luther King Day is always a turning point. Why? Because that's when all those leap options roll off, right? So always a turning point there. If we're down into that, I think it's up. How high? Depends. I'm not going to give you. All right, I'll say this. I think Q2 goes in the same direction that Q1 goes. So if the bull case does take over, and here's the bull case, same as always. Nobody believes the rally can happen. You know, we're starting to get more bearish now. We're definitely starting to get more bearish sentiment. Put call ratio at 1.73 the other day. AAII bears highest since August 8th. Bull's been dropping every week. Again, these are near-term indicators, but if we were to put, you know, we were to keep going down, I think you'd scare people. That was, in fact, I made the bull case this exact reason. I did a video on this in August. I said, here's the bull case for a end of year ramp to 6,100. Everybody's scared now, right? Everybody, carry trade, this and that, the other thing. Everybody was scared of this happening again. And I think that's what happened. So the bull case would be, again, the same as always. Nobody believes in it. Climb the wall of worry. You know, if there were no hole, the breadth, right? If there were no holes in the fundamentals of the bull market, then the bull market would top out. You might say, what do you mean, Aaron? Well, because bull markets are built, they thrive, they need doubt, right? You need those short sellers to get killed. That's just how it goes. I remember everybody was calling this a rolling top when it was just a bull flag. Right, so a lot of people thought, myself included, I thought this would be a bear flag down to here. So you need that doubt to keep things going. So again, saying all that to say this, whichever direction we're in late March, I've done some work on this. I could probably do hours more. But whatever direction we're in late March, I'm looking for a pivot the other way. I'm not going to give out the exact date. Leave that to members only, but late March, I think there's a turning point there. After that, I think the turning point of the year is in July. Again, not going to give you the exact date, but I'll just give you the month. So we'll see how that goes. Again, not really overly bearish, but I do think we'll give some back. So if I had to just make a guess here, I'd say Q1's kind of rocky to lower. Q2, a little bit faster to the downside. And then maybe a bottom in, maybe July sometime in mid Q3. And then I think we could, come back by the end of the year. If we keep going up, then yeah, I wouldn't be surprised because this market does not surprise me at all. The bull moves don't surprise me at all at this point. But yeah, I'd look for, late March, and then, again, sometime in July for those other turning points towards the end of the year. I don't want to, excuse me, I don't want to really get into too much as far as like late quarter three, quarter four. I got to see where we're at here. So for the most part, I'll just say this, like those are the time periods I'm looking at in quarter one and two. And then, we're looking for a pivot there, but overall, I'm not looking for like a huge down year. I could be wrong though. We'll see. Again, these are just forecasts. This is just fun. We're having a good time here. Anyways, I'll wrap it up here. Again, you guys don't forget to take care. Hopefully you guys got something out of the video. Just checking my notes. Yeah, we got through everything. But you guys take care. Don't forget to subscribe to the channel. Come find me on carnivoretrades.com if you like the content. And I'll see you guys all next week.